Hello, everyone. Welcome to our Meet the VC webinar. This is our last one of the year. We're gonna hang on a few minutes here and just give everyone a chance to join. So get settled in as we get ready here for our Meet the VC fireside chat with Vishal Lugani. So just to introduce myself, my name is Dan Dado. I'm the Chief Marketing Officer at Early Growth. Being at Early Growth for me is really a full circle. I started life as a CPA in the Big Four accounting world, and then went into tech startups. I've been around the block there a bit and ended up back at Early Growth after my last startup, and have been not just around the block, figuratively, but literally around the world, making stops on the East Coast, the West Coast, and coming to you today from sunny Santa Monica, California, but also living in Asia and Europe at different times. Some ground rules for today. The discussion is going to be about 40 to 60 minutes long, depending on the Q&A that we have. If we've got a lively discussion, we might go a little bit over an hour as well. So if you're able to stick around, do. Anytime you have a question for Vishal, please use the Q&A panel as part of the Zoom functionality. We'll be monitoring that for questions, but also use the chat. The chat is our way of trying to replicate what we're all missing in the pre-pandemic world of networking at an event. So as you sign in, introduce yourself, your name, your company name, a one-sentence description, where you're calling in from. If you want to share a link to your company website or your LinkedIn profile, please feel free to do it. And hopefully the chat is really active as the conversation is happening as well. Last but not least, we're recording the webinar today, and it'll be available on YouTube afterwards. We'll follow up with an email tomorrow, likely, that will give you all the information and follow up on the links to the video. So before we get started, just really quickly, a little bit about Early Growth. Early Growth is the outsourced strategic partner for you to deal with the finance function. It was one of the first things I did when I started my last company 10 years ago, was I went out and I hired Early Growth. Even though I was a CPA, I was the CFO. I needed to focus on my business, my product, my service, my team, my customers, and I needed a partner that I could trust to take care of the finances, both the day-to-day and the monthly and the yearly, and dealing with my board and putting together financial reports and what have you. So Early Growth takes care of the entire financial stack. From that day-to-day to things that you do on an annual basis, like taxes, whether that be your annual filings or things like R&D tax credits, as well as valuations, 409A valuations and cap table management. We don't just represent startups, we also represent startup investors as well. And so we do some fund accounting work. Some of you may have seen, but probably most of you haven't, some news that was announced on Monday. But Early Growth has merged with Escalon Services. Escalon Services is a very, very similar company in terms of providing services to early stage companies, small, medium-sized businesses, and helping with their entire back office. So Escalon, in addition to the accounting and finance work, also handles things like people management and HR and payroll, risk management and insurance services. So the coming together allows us to take our great expertise with our CFOs, add it together with Escalon's expertise across a broad array of services, and we really end up with just a much, much bigger and better foundation to be able to serve our clients. So it's pretty exciting news. You'll hear more about it going forward. And I'm sure there'll be some changes to our branding and such, but we're hopeful to continue these event series kind of going forward at the same rate, one a month in the new year, but you'll hear more about that. last but not least here, as I said, we're a company that was around 12 years. Escalon, I believe, it was 16 years old. So we've helped thousands of companies that are in the position that your companies are in if you're a founder. Some of the big names, but these big names when they were just getting started, right up through the point where maybe they went public or they got involved in an M&A transaction. We don't do this alone. We do it with our partners. I'm going to stop sharing my screen here in a second and call on each of our partners to tell you a little bit about their companies. But we've got a great collection of partners that are part of the startup ecosystem. And as you're trying to build your company, it's not something that you can do alone. You need to get expertise in each and every area of your business so that you can focus on your customers and team. And this is a great group to help you do that. So let me call on our first partner here with InnovaTech Law Group. So Sanjeev, your video and audio should be getting turned on right now. So you can come off mute. Hey, you can take yourself off mute.
Okay, I'm on.
All right. Welcome, Sanjeev.
That's why I went to law school and not to computer science degree. In any case, hello everyone. Thank you for the opportunity to speak with you today, and thank you to Early Growth. The team at Early Growth has been phenomenal. We've grown our relationship over, I think, about a year now, maybe a little over that, and found it to be invaluable in terms of the network and the services that Early Growth provides. So I'm greatly appreciative of Early Growth setting this webinar up and giving us the opportunity to introduce ourselves. I'm with InnovaTech Law Group. It's a firm I started about 10 years now. I've been a lawyer for 30 years. I've been in the Bay Area all of my life, just about all my life, I should say, San Francisco Bay Area, with several companies, with large law firms. I've been in-house counsel. I've started my own ventures as well, and sort of learned the ins and outs of how to grow a business. And I thought that was probably the most valuable thing I could provide to my clients is firsthand experience in growing a business from the very beginning and learning what it's like to acquire customers, build a product, determine our marketplace, and then taking my legal skills and applying those to structural issues and financing issues. And so having done that a few times, failed a few times, succeeded a few times as well, fortunately. I've been lucky in many circumstances. I decided to start my my own firm and provide some of the legal advice, of course, as a lawyer, but also the business advice, which I'm very excited to provide the strategic business advice that I can sort of advise my clients, not so much on the legal structure part and the financings and all of that, which is fairly routine for me, but thinking with them, growing with them strategically, and providing the benefit of my experience and expertise over the years that I've developed, and really seeing a lot of it come to fruition. I've had amazing clients. I developed amazing relationships here in the Bay Area and actually throughout the country.
Sanjeev, it's great to have you here today. A founder for our founder group, and wanted to welcome to you and kind of move on. We've got a lot to get to today, but thank you so much for joining us.
That's me. All right, thank you. Lawyers talk a lot. That's what we do. Yeah.
Okay, so next up is Andrew Holtz with Andrew, you can come off mute.
There we go. Sorry, I was having a little bandwidth issues there, I think. Thank you, Dan. Hello and good afternoon, everyone. My name is Andrew Holtz. I'm a senior relationship manager with First Republic Bank for about 9 years now, and been in the banking industry for 18 years. As a company, we were founded and headquartered in San Francisco back in 1985. I'm on a very specialized team within the bank, focused on working with tech companies, founders, and investors, from bootstrapped all the way up and through IPO, customizing and tailoring our services based on the needs of the company and employees. We are located in, or at least my team is located in Palo Alto. We're currently managing over $2 billion in our clients' assets for the company. I'd say the success of our clients is in large part due to the amazing partnerships we forged over the years, whether it's venture capital, venture debt, bookkeeping services, payroll, HR, employee benefits, legal. It's very important to have that team surrounded by you as a company as you're looking to grow. We're very proud to partner with Mark and Dan here at Early Growth Financial, and thank you for having me here.
Thanks, Andrew. For those of you not familiar with First Republic Bank, there's a ton of banks out there, right? I mean, you can, if you go to a city, they're on every street corner, but there's only a handful that are really built around the idea of helping startups. And FRB, First Republic Bank, is one of those. They've got wonderful resources and experience in helping companies get off the ground and grow, especially venture-backed companies. So really worth taking a look at. Thank you, Andrew. Next up is Michael Ballesteri with Insperity.
About that. Hi, Mark, thanks for having us. So a little bit about Insperity. We're an HR outsourcing company, and we help the best small to medium-sized businesses manage their most important asset, their people. And when it comes to people, there's an entire ecosystem to think about that comes into play. 401k, benefits, payroll, leadership development, training, onboarding, offboarding, etc. Our 10,000 clients have the luxury of concentrating on growth, products, services, investors, clients, and not human capital management issues. Many startup companies turn to us so they could take advantage of economies of scale to offer a true Fortune 500 benefits offering and HR experience to their employees and employment candidates. There's a lot I can say about this, but I only have a minute. So basically, Insperity helps companies build, implement, and execute an effective HR strategy so they can focus on running and growing their business. Thank you.
Thanks a lot, Michael. It's great to have Insperity as part of the team here today to help put this on. Again, as you put your dream team around you, bringing on a company that helps you deal with your own team and create both a culture and a foundation built around success and happiness is really critical. So having a partner like Insperity is very, very important. Next up, John Prentice with Lighter Capital.
Great, thank you. So thanks to Early Growth Financial Services for having us. Like usual, we're always excited to partner with you guys on these events. Congrats, by the way, on the acquisition with Escalon Services. They have a great team as well. So as mentioned, I'm with Lighter Capital. Lighter Capital is an early stage technology lender that provides non-dilutive structures to mostly B2B SaaS companies that might want to delay an equity raise or not ready for going on to the market for Series A. Unlike traditional venture debt lenders too, we also don't require equity sponsorship or that you've already raised VC. To date, we've worked with 400 plus startups across the US, Canada, and now Australia as well too. So be happy to catch up with folks afterwards if they have any questions or are interested in learning more.
Awesome, John. Thanks. Lighter Capital is a regular partner of ours for putting on these webinars, and they're a really, really interesting company as you're trying to get your company off the ground and growing. Being able to tap into non-dilutive financing, really, really important as a founder. So if you've got monthly recurring revenue as part of your business model, you should be looking at a partner like Lighter Capital to work with. Thanks again, John. And last but not least, Leah Copperthwaite. Leah, why don't you tell us a little bit about Globalization Partners?
Thank you, and thank you for having us on today. Globalization Partners, we make it easy to hire international employees compliantly. We're an in-country HR partner. So we're taking over all employer responsibilities when it comes to managing onboarding, running payroll, providing in-country benefits. We do this on behalf of our clients in 187 countries. So whether you're blitzscaling or you're hiring just a couple of engineers, the best in the world, we can help companies grow quickly and compliantly on an international scale. Thanks so much for having us.
Thank you. Thank you for joining us and helping us out today. Okay, thank you, audience, for bearing with us as we go through that. I wanted you to get a chance to meet all of these great partners because, again, they're critical in putting together your own team. I'm going to get us back here with a poll question.
Dan, I think we lost your audio.
Sorry about that. Okay, we lost the audio. I'm going to share the results of the poll. So most of the folks here in the audience are raising a seed round. This is, I think, typical as we do these talks here, Mark and Vishal. We've got a lot of people who are very actively raising money, either in a seed round or a Series A. Okay, let me get rid of that, and let's get us back to our moderator for today and get us kicked off with a discussion. Mark Dabu. Mark, why don't you come join us here and come off of mute? Mark has been with Early Growth for about a year and handles our Northern California market. Like many of our market managers, Mark has experience being in your shoes as a founder and being in the IT world. But also, if you need a photographer for your wedding, give Mark a call. Mark, welcome.
Thanks, Dan, for the introduction. Really appreciate that, guys. Once again, just a quick recap. Mark Dabu, your moderator today. Thanks for joining us, everyone. But really to kind of introduce the star of the show today, would meet the VC, Vishal Lugani from Acrew Capital. Probably one of the only guys I know coming out of Harvard and really propelling into the industry here. He is also the founding partner at Acrew Capital, previous experience with Aspect Ventures, Graycoff and Bain. Definitely excited to have you here, Vishal. I'm going to actually hand over the mic to you right now to kind of give you the opportunity to introduce yourself, your firm, and tell us a little bit more on how you got started with Acrew.
Yeah, absolutely. Hi, everybody. Sorry, can't see you all, but it's nice to I guess air quotes meet you. I'm Vishal Lugani, founding partner at Acrew Capital. We're a firm that started last summer. We'd all been working together for several years at our prior firm, Aspect Ventures, and invested 2 funds there, and then kind of spun out with Acrew to do, in many ways, more of the same, which is early stage investing that's thesis focused and conviction led. When we were forming the firm last summer, thought a lot about our core values, and we sort of post them publicly on our website. But it was really important to the 5 of us that wanted to continue working together and start a new entity. And so I'm happy to go into more detail there. But at a high level, typically looking to go lead Series A's. We could do a little bit of seed investing. Saw a lot of folks are raising seed rounds, and then we can do some later stage investing opportunistically as well. We're investing out of this first vehicle, this first fund. It's just over $250 million. 5 of us that co-founded the firm on the investment team, and we have a 6th team member we added in January. So we're growing ourselves and hiring and building out a lot of the infrastructure that would be required for a firm. And then we have another 6 colleagues sort of who are helping on back office and admin. So it's been a wild 1.5 years, and I'm excited to be here.
Fantastic. Thanks for that, Vishal. obviously to kind of, get a little bit more accustomed or learn more about your background, tell us how long you've been a VC and tell us a little bit more about the path that got you into venture, just for us to kind of understand a little bit more about your background.
Yeah. So I thought I was going to be a lawyer. When I went off to undergrad, I sort of interned at the district attorney's office, and they put me in misdemeanors because I was 15 or 16, and they didn't want me in the felony area. I had some funny experiences from that, and basically, as soon as I went off to school, got looped into a startup through sort of fortuitously. There were these two seniors at the time who were starting a fintech that was aimed at connecting student entrepreneurs, aimed at linking alumni with students and facilitating 0% interest loans. And so it's kind of an affinity-based model. I think it was around the time that Prosper and Lending Club were sort of getting their wrist slapped by the SEC, and SoFi was probably in the early stages, and we actually structured it as a nonprofit. Those two founders did, and so I was part of a small team that was helping them get it off the ground. And that was my first exposure to real exposure to tech and startups. And through that, I got introduced to a now close friend of mine, Ankur Jain, who was starting an organization called Kairos that had the intention of connecting student entrepreneurs across college campuses. So, there's good network connectivity within one campus, but how do you, on a regional basis, on a national basis, eventually on an international basis, which is how the organization has scaled, how do you connect student entrepreneurs and young entrepreneurs, more broadly speaking, to resources and to each other? And so helped Ankur and the rest of the folks that were sort of early on get that off the ground. Started a chapter at my school, and then we sort of helped build the expansion strategy from there to go really scale out across the nation and then eventually internationally. I went to Bain to do consulting. It interned there, and then joined full time in New York, and then had transferred out with Bain to LA. Was starting to think about potentially getting into investing, because I thought it would be a nice mix of a lot of the things I really liked about consulting, and then also a lot of the experiences of spending time with entrepreneurs and as an undergrad. And an opportunity came up to join Greycroft, and so I did that. That was in LA, maybe almost a decade ago now. And that's kind of the start of my investing career. Was fortunate to work for some really great investors. Spent just under 4 years there, focused on consumer and fintech, and then moved back to the Bay Area, where I'm originally from, to join Aspect Ventures, which at the time was kind of a startup fund, and growing nicely, but founded by two longtime VCs. And then as I shared, fast forward to last summer, and my partners Teresa Gao, Lauren Kolodny, Mark Rainack, Assad Kalik, and I started Acrew, and that's our new firm, that's our new entity, our brand. And just one more thing to add is we really started it to be multi-generational, and we think that is honestly really a differentiator. I think there's a lot of new firm activity. Oftentimes they're started by age peers, and we had the benefit of having 3 generations on the founding team of investors, Gen X, Y, and Z. And so one more thing to share with you just about how we got here, but my focus continues on fintech and consumer. I do a little bit of digital health as well.
Fantastic. Thanks for sharing that. Very, very impressive background, by the way, and a great track record. So kind of moving on to our next question here, for many of our founders that are joining us today, to kind of really help us kind of understand a little bit more about the fund size you traditionally work with, as well as, what does your typical investment size look like if you do have an industry focus as well?
Yeah. So the fund's 250. We are generally, we'll write checks anywhere. I'd say at the seed stage, it can be, on the low end, probably 250 to 500K, all the way up to, $1 million or $2 million. We typically end up being participatory in the seed, although we've made exceptions, particularly in areas of core thesis development for us, or core domain expertise. And I'd also note that the definition of rounds keeps moving around. So Series A, we've even seen, just to share with folks, I'm sure this is no surprise, but we've seen, it used to be 1 to 2 rounds before the Series A that were raised, and now we're seeing it look more like 2 to 3, sometimes 4. And that acceleration has taken place. That's accelerated over the past few years. And so we're seeing more and more rounds be raised ahead of the Series A, which I say just to, that's why we say we're early stage, broadly speaking. And then we can write checks up to about 10 to 12 million at the outset. So, you can think of that range as kind of 500K to all the way up to 12 million. Sweet spot for us is probably in the middle of that, around the Series A, or sort of maybe a larger seed or an early B. But Series A, kind of mid to high single digit $1 million checks is probably bread and butter.
Thank you for sharing that. We do actually have a question that came in from Mark Patterson for you, Vishal. He wanted to ask, how do you distinguish between pre-seed, seed, and Series A rounds as an organization?
Yeah, I think, generally, again, there's always exceptions, but oftentimes, whether it's the seed or the A, we're typically seeing a product to market. There are certain industries where that is less relevant as a sort of a bar for how we qualify or classify rounds. So, I give you a concrete example. Security is probably a good example of that. Cybersecurity is one of our largest areas of focus. Oftentimes it takes, significant development on a relative basis to actually get product live and launched in market. So there's, it sort of depends on the nuance of the industry. And if we were to go really on the earlier side, I'd say pre-seed is fairly rare for us. But if we were to go, on an earlier seed round, and particularly if it were pre-launch, I think we'd look for deep domain expertise among the founders. We'll probably get into this, but I think we're oftentimes looking for what folks will have heard of as founder market fit, why, and trying to understand why individuals are starting a company. So I'd say it's kind of a squishy answer. It's not I wish we had sort of really firm criteria, but it's going to vary based on the sector and sort of also what the business is trying to do and the composition of the team.
For sure. Thank you for answering that. So moving on to our next question here, Vishal, to kind of tell us a little bit more about your practice. How do you traditionally make investment decisions and what traditionally goes into that decision-making process, right? And of course, how does the firm approve of those decisions if you guys decide to work with a founder?
Yeah. So we run a consensus-based process. We started the firm to not only be multi-generational, but really ensure that everybody on the investment team has an equal voice and seat at the table. And we want to try and strip away as much as we can hierarchy. And so, I think we want every investment to be an Acrew investment. It's really core to our philosophy. And I mean, what that really means tactically is that the team needs to sign off collectively on a consensus basis. And so in theory, if somebody felt really strongly that we should not make an investment, we likely will not make that investment. So that's decision-making process. I'd say, we try and tailor our diligence to what the situation is at hand with the particular company we're looking at. So, we feel like we're lean and nimble enough to have fairly responsive diligence process and one that isn't necessarily boiling the ocean or super like checklisty, if you will, but is really tries to capture the key questions that come up amongst the team that are contextual to what the opportunity we're evaluating is, what the business does, and then lead with that. So we try and have a lean and nimble diligence process. It's a constant process of iteration for us, and it's an ongoing aspiration.
Definitely. And as far as kind of the traditional clients, you have a preference in working with, is there a traditional industry focus that you guys have a preference on? What are the types of founders or companies you guys, traditionally like to work with as well?
Yeah. So 5 core areas of focus. I'd say fintech is probably co-equal with security and infrastructure as our largest areas of focus. Fintech would encompass both application layer B2C and B2B businesses, as well as financial infrastructure, which we're seeing a lot of activity in. On the B2C side, my partner Lauren had led the Series A2 for Chime at our prior firm, and we're investors in Phoenix and Papaya, Deserve, and a couple insurance companies, Pi Insurance and AtBay. AtBay had a nice announcement yesterday. So that's sort of fintech. Security infrastructure, I think, is hopefully self-explanatory, but there we're sort of meaningful investors in Cato Networks and Exabeam as two examples. We have a third category we call work reimagined. We used to call it future of work. And we sort of continued to iterate and refine that. But I think I think I saw a question come through around SaaS. I think we certainly think about different types of business productivity and SaaS applications. No hard and fast rule there, but we do end up working with a bunch of companies that have a bottoms up type motion. Although that's not a hard and fast rule by any means. And then we have two newer areas of focus for us. One's kind of, they're a little bit more, especially data interconnected, a little bit more horizontal. So we have one called data interconnected, or we're looking for businesses that help facilitate breaking down data silos, either within an enterprise or across an industry. And oftentimes the business expresses their product via API. There's typically some type of data science component, oftentimes specifically a machine learning component to what they do. And so, that's one more example. And then we have our last category, which we're building out, called community activated. They're all sort of branded as our thesis areas. And we're looking for consumer networks or communities, marketplaces forming online. I think that there may be some fatigue with some of the horizontal networks, or there's room for new entrants to really serve passion points, passionate communities, or very specific use cases. And so a bunch of examples of companies that are starting to scale already, and we're seeing a whole wave of new companies enter, accelerated by, I think, maybe some behavior change from COVID, as well as some technological tailwinds, whether that's voice platforms or potentially AR, VR coming online, or even just the democratization of machine learning to allow for better personalization.
Thank you for that, Vishal. And also something that I did want to kind of point out, this is something that's really highlighting a lot of, anyone that's attending today that's an early stage founder or young entrepreneurs. So, tell us a little bit more about how you work with underrepresented and young founders in the industry and how you've helped them in their success. Really something that stood out to me in your thesis as well. And I'd kind of like to learn a little bit more about that as well and kind of hear your perspective on that.
Yeah, it's, I think it starts first and foremost with tracking. So, I'll take a step back. I think our team, we feel like, is a good start in terms of being representative of a variety of different perspectives and specifically also representative of some underrepresented groups within tech and within venture specifically. I think there's continued work to do. It's never sort of an end state. But everyone who's around the table at Acrew is excited about building high-performing teams and building teams that bring together diverse perspectives and sort of celebrate the diversity that we have in the country. And so that's kind of first thing I would say. But then we track pretty closely what our funnel looks like, not only for deals writ large, but also whether those opportunities, those companies that we're evaluating, we're looking at, and hopefully that we're attracting, are sort of comprised of teams that look diverse, and specifically teams that may have underrepresented founders. And so I think what we found over the past, as our team working together for 5-6 years, and many of us being in the industry for much longer, we've sort of been tracking the funnel and found that we tend to convert. First off, we're seeing sort of mid double digits representation in the opportunities we're evaluating, and then we're tending to convert fairly close to that in terms of our portfolio. So I think continued work to do, and that is actually where we were really excited to announce most recently a partnership with Concrete Rose. So our partner Teresa Gao had known Sean Mendy and the founding team at Concrete Rose for several years, as Sean was starting to ideate on this notion of building a seed fund that was going to back underrepresented founders, tending towards sort of underrepresented minority founders, both men and women. Teresa, I think, was helpful to them in thinking through ideation and launching the fund, and she's an investor in the fund as well. And she did so in tandem with a couple great other advisors, including Jeff Weiner from LinkedIn, and we formalized. We were in talks to formalize that relationship, and we're able to. Acrew's only been around now for a year and a half, but we were able to actually formalize that this calendar year, which we're really excited about. And so we have a formal relationship with Concrete Rose where we have a lot of back and forth with them. Again, they're a stage earlier than us, or sometimes 2 stages earlier than us. But we have, I'd say, pretty programmatic check-ins and information and communication flow with Concrete Rose. And that, I think, has helped us bring additional sort of network coverage and just connectivity to different groups of founders across the country. And so for us, it's about continuing to work on the representation on our own team. It's about making sure that we're tracking how we're performing. It's a variety of metrics, including diversity. And then it's also about, where we think we need to continue to shore up connectivity, building those partnerships with other great groups of, it could be collectives of founders, it could be other seed funds, and Concrete Rose is probably the most recent example of us formalizing a programmatic partnership.
Congratulations on that partnership, and I'm glad you guys are definitely focusing in that area as well, just because it's good to see other minorities and underrepresented founders in the industry kind of gain that level of success through the help of VCs like yourself. So that's definitely good to hear. Gonna kind of take a quick pause here. We do have a couple of questions in the chat here. Dan, did you want to go ahead and pick these out, or did you want me to go ahead and just read from up top, by the way?
I'm happy to pick one out. So Vishal, you were with Graycroft in LA, and Graycroft has a LA and New York footprint. You're now in the Bay Area. So we always get questions about geography, and I think those questions and answers are a little bit different in this COVID world that we now live in. We've kind of changed the dynamic of geography in terms of where founders are located. Maybe you can talk a little bit about your thoughts on that and where you focus specifically, and for those of the entrepreneurs that aren't based in the Bay Area, how they might work with you and other VCs.
Yeah, so Acrew is broadly focused on the US. We'll do Canada as well, Canadian investing as well. And we've actually made 2 investments in LATAM, but I would think of us as primarily a domestic focused firm. The goal is to build a lean and nimble firm that founders really love working with at the early stages. And in order to do that, I think we have to be focused on a variety of dimensions. Geo is one of them. That said, within the United States, I think we're open. Recognize that there's innovation happening everywhere, and you're seeing hubs pop up in every single region in the country. I personally have a big affinity to LA and New York, given the experience of living in both places, and then also working at a firm that was based in those 2 markets. And we're seeing a lot of really great opportunities come out. One of our most recent announced investments in a company called H.M. Bradley is based in Los Angeles in the fintech space, and I work closely with them. We have investments in Seattle, we have investments in Austin, Atlanta, Boston. So it runs the gamut in terms of different regions of the country, and I think we'll see more and more of that. Obviously, COVID is maybe even an accelerant to that. But yeah, I would think of us as primarily domestic, kind of geo-agnostic within the country. On occasion, we can make some international investments. We typically only do them when we have strong domain expertise, or we think, we feel like we do. And also we do them in tandem with a local fund that has really strong geo expertise in that geography, because we recognize there are differences.
And how are you finding these deals, and how are the deals finding you?
Yeah, I'd say pretty similarly to how we do it across the board, how we source across the board. We meet twice a year on an offsite basis as a team and do thesis development. This is if you've ever had to talk to me like the 2 or 3 weeks before our offsites, it's like all hands on deck in terms of doing our work on continuing to iterate and refine our theses. And so that's a really big part of what we do. It traces back a lot of the philosophy. I think we're all bought in on it, but a lot of it traces back to Teresa's time as a managing partner at Excel, where she had kind of come up in venture and actually working with some of the founding partners of Excel, Arthur Patterson and others, in thinking about prepared mind, as they call it. And we sort of borrowed that phrase. So we don't expect to know exactly where the opportunities are going to be, but we do want to make sure that when we directionally come in and listen to companies talk about the market they're going after, in our areas of focus, we want to actually be up to speed and cut down the time to get up to speed. And so we do that formally via our offsite our offsites, where we're doing a lot of thesis generation. That highlights for us opportunities in our different domain areas of focus that I shared. So that's one way we proactively look for opportunities. I mean, I'd say we get referrals from our founders as well, particularly as we start to build concentration in an area. We'll oftentimes get recommendations from our founders, and then we also build bridges and strong relationships with seed funds, who I know there's some questions around stage. I mean, they tend to invest 1 to 2 rounds ahead of us, upstream from us, and so for a variety of reasons why we try and make ourselves attractive to work with from a co-investment point of view to those seed funds. But specifically, and to your question, I would think we have some great relationships with seed funds in New York, in Los Angeles, Texas, in the Southeast. So that's another way to, specifically around the question on geo, get that connectivity.
Thanks, Vishal, for that. So going back to just a few more questions here for you. This is a question that I'm pretty sure many founders are interested in learning more about, but what should entrepreneurs know about you personally, that would allow them to help when pitching for you?
It's funny. I guess everyone, this is such a people business in that, for both sides, in that it's a especially at the early stage, it's an enduring relationship where once the investment takes place, you kind of, if I were to invest in you, you'd be stuck with me for, I don't know, at least a couple of years, and maybe longer, 10 years. One of my partners has been on board for 12 years, and the company eventually went public. But so I think it's an enduring relationship. So you really want to spend time to get to know somebody. I get really excited about complicated industries. And I get really excited about, not that every industry doesn't have its complexities, but industries particularly at the intersection of regulation and significant consumer impact. And so where that's expressed itself the most for me historically has been fintech and digital health. And I just think that those are as we're seeing with the pandemic on both fronts, as people think about their wallet and as people think about their health, they just have so much impact on the world. And I've always shared with folks, I want to be a lawyer. I've always been interested in policy. And so they are very much impacted by policy. As for example, in digital health, you'll see from, the rollout from the ACA and all the other implications there. So I don't know if that answers the question directly, Mark, but it's one thing that I probably would share.
No, I think it does. Yeah. Personally for our founders, anyone that gets a opportunity to work with you in the future, just know that, you guys are in it for the long run, which is good. Right. So that's definitely good to know as far as kind of how your personality goes. So thank you for that. The next question here is kind of just, flipping that question a little bit, but, tell me about a business that pitched to you, but maybe you decided not to invest in them. Tell me a little bit why and what are some of the reasons, why you decided not to invest with them, and maybe some suggestions or tips that you kind of, left on the table for them to walk away with, or just any valuable information that they can kind of move forward with, move down the road.
Yeah. I'm trying to think about how much, obviously, I think the first thing I would say is that we have a limited set of opportunities that we can pursue and limited set of companies and the founders behind those companies that we can back in any given year. That's by design. obviously it's a mutual process. It's us wanting to invest just as much as companies wanting to work with us. So I guess that would be that's what I would say at kind of a high level. But, I'd say, I think of one example in COVID where we spent a lot of time with the company in the consumer space. I probably won't go too much more detail because it was growing very quickly, and we dug into the metrics, and we at the early stage you have to take leaps on certain dimensions, and for us we just had a question around whether a lot of the engagement, et cetera, would sustain over sort of as you get past the early impacts of COVID to folks spending a lot of time on their phone, et cetera, even more time than we all normally do. And so, I think that was a really tough set of conversations internally. And we spent a lot of time with the founders. We're really impressed by them. But I think when we think about how many jumps we need to make and there's always going to be questions that are unanswerable, but whether we can build a consensus internally to get comfortable with those unanswerable questions, I think, that would be an example where informed by our own conversations around, what's going on in the macro, and then also just looking at the specific data at hand. I think we could not get there. But I think it was a fantastic team.
And just kind of pivoting to that, obviously this year has been an interesting year for many of us. Just looking to see how has your decision-making process kind of changed during COVID times? Has that been more of a lengthier process? Just kind of walk us through that decision-making process, if anything has changed under normal circumstances. But it's kind of good to know, right? This year has been definitely interesting for a lot of founders, especially when getting in front of investors like yourselves.
Yeah. So, we're adapting just as everybody else is. We've been pretty active. It's been an active year for us, and I think it's been an active year for a lot of our peers and for the industry as a whole. We've been fortunate to have some relationships that we've been building over the past year or two where we saw a real acceleration in some of the businesses, and we were able to get involved in those companies. And so we had an existing relationship. We'd met in person. We were able to have some historical context on how the business has been doing, and we were able to write some meaningful investments into those companies. And so a good example would be Solve, where we, if anyone's tried to go get urgent care or convenient care or get COVID testing, Solve is probably in the top couple results that you get on Google. They are software for urgent care and convenient care clinics that helps run the practice management, collect billing, patient communication, et cetera. Business doing really well prior to COVID. And then, I think the team demonstrated a really exceptional ability to continue to iterate on the product. And they now, and they launched a lot of guidance to help Americans find access to care and specifically to COVID testing. And so they've been growing really nicely through over the course of the year. And it's just, honestly, they're solving a really important problem. I didn't actually mean the pun in that instance, but our team and our partner Teresa had known Heather Daniele from her time leading the Series A for Trulia, where they were executives and very involved. So we had that enduring relationship, and ended up leading what was effectively a Series B2 for the company. And so that closed during this period because the announcement was recent. And so that would be an example where we had an existing relationship. We have also made investments where we where we had not met the entrepreneurs ahead of this period, and we're not able to meet them in person for any one number of variety of reasons that everyone can imagine. And so there, what I would say is actually, if offer unsolicited perspective to the folks on the phone, I think for us, it becomes increasingly important to spend a lot of time on Zoom with those entrepreneurs and make sure that we're taking the time to really get to know each other, and that most often will take the form of formal diligence, but we'll also have some informal time we'll spend on Zoom, the same way we would have gone to coffee or breakfast or drinks or dinner with founders behind whom we were going to invest. And the other thing that I think has been helpful if I reflect on the processes is, our ability to reference both customers and then also just individuals who know those founders and have really worked with those founders in non-COVID times. And I would say it's mutual. I would say that we're doing that. We always do that. I say that we're doing that at a higher rate now because we can't meet in person, can't go see the office. And I would say that the founders we're backing are doing the same. Honestly, they're pulling a bunch of our references, and before they make a decision to work with us, they're calling multiple of our founders for, I would imagine, the same reasons. So, to the extent you're in processes with investors and you have, some sort of network connectivity, 1, 2, 3 degrees removed, and you can find ways to demonstrate that network connectivity. It's always helpful. If it doesn't exist, that's fine. I think you can also spend a lot of time just getting to know each other, both formally and informally, on this medium too.
Very valuable information, and I think definitely, it goes unsaid enough, but the power of networking definitely is it's definitely helpful down the road, making sure you're connecting with the right people. So to kind of just, we got a couple more questions here due to the shortness of time, but tell us a little bit more about the success of your portfolio, right? What do successful founders do really well after you've funded their business is our next question here.
Yeah. I certainly think, I certainly think team and the ability to continue to attract talent to the team. I think probably our founders that really end up scaling companies, one of a number of reasons why that happens, but oftentimes, we will see a pattern, and that's all I can share with you. I can tell you correlation, I can't tell you causation, but we'll certainly see a pattern of those founders being really effective at closing great talent and having really a great ability to identify talent, both opportunistically, but then also identify where there are specific areas where the founders want to bring great people onto the team across levels, honestly, but definitely including the management team. So I'd say that's really core and key. At the stage in which we're investing, including the Series A, the founders end up being the evangelists of the product. There may be somebody who's handling sales more often than not. That's kind of in process where sales leadership is being built up. But we're seeing a lot of founder-led evangelism and sales. And so I think that just seeing that excitement and that passion and the detail orientation, in addition to the vision, it's kind of like two things at once, certainly is really encouraging to us when we see that.
Definitely valuable information. So just one last question here for me before we jump into just our Q&A session. We do have a couple more questions here. Just general advice for the audience today, right? I'm pretty sure everyone and everyone appreciates your time and the knowledge that you shared with us. But is there one piece of uncommon knowledge that you want to share with entrepreneurs, and what would that be?
Yeah, for sure. Well, I think market is always a little bit of a trap when people think about the market. And I think you can say it for enterprise or for consumer. And sometimes it's more commonly understood that market sizing, market definition can be a trap for consumer, but probably applies in enterprise, particularly in a more dynamic enterprise landscape where buying decisions are being made, whether top down or bottoms up, in increasingly different ways. And so, I think you can point to a bunch of really big success stories where, if you've done the work, and this is well chronicled, like Uber is a really good example. That's very well, Uber and Lyft that are very well chronicled. But if you had done the market sizing on it and summed up what do taxis make, et cetera, and done a market by market, you'd have a very different market size than what is actually bearing out. And that's just the nature of the business, and it's the nature of how technology moves things and how innovation works. And so, I don't know if that's uncommon. I don't know if it's a cop out, but I do think, we do spend a lot of time doing market mapping and thinking about the market. But at the same time, we want to make sure that on our side as investors, we're not getting, we're not only doing the look back, we're also understanding that the look forward, looking forward, things can be things can be different and markets can be dynamic.
Thank you for that tip. Really appreciate that. So the last 5 minutes here, I'm just going to go through a couple more questions. Vishal here. Actually, one from an anonymous attendee here, but this is really to kind of, I guess, highlight or key shine some of the values of Acrew. But what are some advantages for founders in working with Acrew compared to more established VCs that are out there?
Yeah. So I think that couple things. One, I think, we're fortunate to have on our team folks that we're not only multi-generational, but as a component of that, we do have significant expertise on the team, the investment team, both in investing and operating. And so I think while Acrew is a new entity, new brand, we were fortunate to have that representation on our team, and we also have all been working together for several years. And so you get a team that's, when you work with Acrew, you get a team that's very much on the same page. Where team is actually, I keep saying the word team, but it's kind of, you could probably pick up from our name, where we try and highlight crew, where we really do think about how do we do things collaboratively, and that benefit I think accrues to our founders. So the feedback we've gotten from our founders is that it's not just Vishal is my board member or my investor, or Lauren's my board member or investor. It's we really get access to the full team. Like obviously there will be, sort of typically two people dedicated to an opportunity as a sort of point of contact. There may be formal board relationships or not. But whenever there's something that comes up where we can be helpful, or for example, I'll speak for myself, I think one of our partners can be, might have really valuable perspective. That connection happens, immediately. Those calls get set up. We think about every investment collaboratively and as a shared Acrew investment. And so I can't speak for others and other firms, but I think that we feel that's a differentiator. I think the focus on domain also ends up being beneficial to our founders. I think, take fintech, for example, an area I focus on. Fortunate to have some really great companies represented in the portfolio, and we facilitate those connections anytime something comes up. Not only that's just more broadly about the founder journey, but also that's specific to a type of business. Could be a business model, could be an industry vertical. And then lastly, it's one of our core, one of our core values that we talk about is being committed to the development of each other, and also the development of the teams that we back, who we consider very much to be part of our crew. And so I think, the founder journey is, I won't speak for the 90 people on the webinar, but the founder journey is one that I think can be really lonely, and it's all encompassing. It's not just professional, it's personal as well. And so we think a lot about personal and professional development and coaching, and we're working on and always accepting input on programs that we can spin up for our founders. And we started by doing it honestly with ourselves, and so we spent a lot of time working on coaching internally, and think that if we set up those processes for ourselves, we'll be able to do it for our founders too. And we've been starting to build out that network. So I think in summary, you get a team, you get hopefully a lot of support around bringing diverse perspectives to bear, and access to different types of networks, many of which are underrepresented. You get some domain expertise and the early stage focus, and then you also get a focus on development and coaching.
Fantastic. No, that was I'm glad I asked that question. That you answered a lot there. So due to the time here, Vishal, on behalf of everyone at Early Growth as well as the audience, we do want to thank you for your time today. It was definitely an honor getting to learn more about you and your firm as well. At this point, I'll actually pass it back to Dan for any final comments. But Vishal, it's been a pleasure.
Likewise.
Yes, thank you, Vishal. I want to thank all our attendees and all our partners as well. And Vishal, if you're okay with sticking around for a few more minutes, we might have had a few more questions, and I'd love to follow up on that last one. Yeah. But before we do, I do recognize that some of you folks have to get on to your next meeting, and this was scheduled to end after an hour or so. One of the answers that Vishal gave in terms of how to get in touch with him when you've got a pitch is the power of your network. Whether it's your lawyer, your banker, firms like Early Growth, they become a key part of your network as you're looking to get in touch with potential investors like Vishal or seed investors or accelerator programs. So although we can't meet face to face, these events are great ways for us to get in touch, and it's something I know that we do for all our clients. Happy holidays to everyone that has to leave. We will schedule our next webinar for mid-January. I believe it's January 13th is our next one. It hasn't been posted yet. But again, if you want to stick around, we're going to go through a few more questions for another 10 or 15 minutes of overtime. So thanks, everyone. Vishal, my follow-up on that last answer.
Yeah.
As a serial entrepreneur, you hit the nail on the head when you said it can be isolating, it can be lonely. And we're in a pandemic, which can be isolating and lonely. So mental health and mental wellness is a huge issue that faces the startup community in general, but has really been a big problem here over the course of the last 6 months. And hopefully we get out of this soon, but that problem doesn't go away for founders. So maybe you can talk a little bit about your experiences and what you guys do as a fund, as a firm, to help your founders and their teams on that front.
Yeah. Well, I mean, I think first and foremost, recognizing that and just making time and space for each other has been something that we've been trying to do actively. I mean, even before I get into, formal programming or anything thereabout. So, unsurprisingly, a lot of our conversations with our founders are about how they're doing personally, and then also, because our founders are always thinking about their team, how their team is doing, and a lot of those conversations around team is team morale and team how folks are doing personally. And so, we have a company, for example, that's split between New Zealand and the Bay Area, and when we talk about the different texture of how the team's doing in New Zealand, where everything's open right now, and then people are back together in person, and then we talk about what it's like in the Bay Area. It's I think there's a marked contrast there, and that highlights and gives some context to just how varying experiences are. But I think collectively, it's just a stressful time for everybody. So, yeah, I mean, I think that's kind of first and foremost. There's a variety of different resources. I mean, even just from the point of view of being an investor in digital health, I've seen a lot of resources come up from a mental health point of view and perspective. So we're always quick to refer and point our founders if it comes up and when it comes up to those resources. And then, I think on the front of development and coaching, I mean, we're in the works of actually starting to programatize some of those coaching programs for our founders, and a big focus of that's going to be on personal, being able to sort of allow folks to talk about what's going on personally as well. Till date, we've referred folks to different programs, including, one that's well known in the Bay Area called Leaders in Tech, which is run by a former lecturer, facilitator at Stanford's Business School. But now we want to, continue to think about how we can build out some of those capabilities as a firm programmatically and offer those to as many of our founders as possible.
Awesome. It's definitely needed. It's something that every founder struggles with. Mark, you wanna ask another audience Q&A?
Yeah, I do have another question that I'd like to ask. Obviously, this is something super relevant in our time. You might have touched a little bit on it earlier, but a question that has come up is, have you invested in any startup without having to see face to face? Obviously, we're not allowed to see people, but I mean, during the time, we were allowed to just kind of meet people on a regular basis as long as we're compliant on the rules. But have you had to make that decision where you made an investment without having to see someone in person and just done everything over by Zoom?
Yeah. Yes, we as a firm have several times, and I have as well. In this case, it was a seed investment that we made in a fintech company that hasn't yet announced their round. And I had not known the founder. The founder was not known to anybody else at the firm, but we did know several people who had worked with the founder before. And either, directly or actually, in this case, actually, a lot of times it was sort of in the industry, either as a customer or vice versa, as a vendor. And so I think that was really helpful, honestly. We spent a lot of time on Zoom. It was actually, I remember it was during the fires. So it's like you have this pandemic, and then, San Francisco's orange, and this founder was between San Francisco and the Northwest, and fires were really bad there. And so it's just mayhem. Everyone's locked in their houses. But all things considered, fortunate to be able to have those sustained conversations, and then obviously make the investment. That's good.
Dan, did you want to take the next question here?
Sure. So we got a few questions that are typically about industry. Are you interested in this industry or that industry? A few of them are asking about AI and machine learning. There was some chatter from a founder in the chat room about cannabis and health tech. So maybe those are two industries that you can weigh in on if you do invest in those areas. And if you do, I'd love to hear your outlook on something like the cannabis industry.
Yeah. So definitely on AI, broadly speaking, and ML. I mean, we see it woven into the fabric of a lot of companies that we're backing that may not specifically be AI focused, but it's an important component of what they do. It's how they build an edge in their industry, whether that's broadly data science or even more specifically, there's some sort of feedback loop for the machine learning. And so that could be in insurance, it could be on the infrastructure side. It's just a variety of different ways in which that manifests. And then in regards to cannabis, I would say we do not have any investments. There probably could be within our domain areas of focus, software investments that might not touch the leaf. We've not yet made investment. I think it'd be a conversation that we'd have internally. I don't know that we have a really. You'll be familiar that some funds have certain considerations as it relates to what they can and can't invest in based on the makeup of their limited partners, their investors. So that's always a consideration, without going into too much detail for every fund. Some might have it, some might not. So that's a good thing to clear. And then I would say, for us, I don't know that we have a firm position on cannabis. I think physical products tend not to be, CPG, for example, would tend not to be a core focus for us, but obviously it's a complicated industry. It's one that is regulated inconsistently. There's a lot of opacity as it relates to how payments should and shouldn't be accepted. And there's a lot of dynamism to it. I mean, it's obviously changing. I think saw the headline yesterday that the House is thinking about decriminalizing marijuana. So we'll continue to evaluate it, and we would look at opportunities particularly if they took more of a software bent. And I would say even more likely if they weren't specifically oriented in cannabis, but we understand there are a lot of industry structures. So that's a long-winded way of saying we don't have a hard line on it, but it hasn't manifested an investment as yet.
Dan, as far as questions on my end, I think I'm good. I'm not sure if you have anything else you'd like to bring up.
No, I mean, we've got a ton of questions. Vishal, maybe we'll have you back again. But I do want to be respectful of everyone's time, and especially yours, Vishal. Thank you so much for joining us today. Thank you to our partners. Thank you to the audience for joining us. Again, I hope everyone has a happy and healthy holiday season. I sent out a link in the chat. If you have the opportunity to give during this holiday season, we're running a campaign for No Kid Hungry. Please think about the other folks that are having a much tougher time during this time of year, and help them out. So thanks again to everyone. Mark, great job. Vishal, great job. And everyone, take care, and we'll see you in the new year. Bye-bye.
Thank you, everyone.
Thank you, everybody. Take care.